Oh, you could lose your home. Well, you know how else you lose your home? You lose your home if you can't make your mortgage payments. They maybe lose a spouse, and that's what happened to my friend Margot. And most of her income, the family income, was gone. So she could have lost her house, but the reverse mortgage actually helped her stay in the home for like another 15 years to come. It was truly amazing, and she never had to make another payment.
What if the best chapter of your life hasn't even begun yet? What lies within you is the power to live brighter, bolder, and truer than ever before. So welcome to Vivatude, where caregiving, connections, and career come into balance, and where your vitality, vision, and voice shines through. Because the revolution isn't out there, it's already within you. Welcome to Vivatude.
Welcome back to Vivatude. This is Kate Phillips, and I am your host for financial and occupational wellness, which I like to call purpose and prosperity. And I'm here with Rebecca Porter. Rebecca Porter is a reverse mortgage specialist. And in our last segment, we started busting the myths. One of the myths that we were busting is that reverse mortgages aren't just for people who, they're out of other options, but it can actually be used as a strategic tool. Rebecca, tell us more about a line of credit and why somebody might want to set that up earlier, not when they're in dire straits, not when they absolutely need that money, but as a strategic tool.
So the biggest reason why, and this is hard for people to get their head wrapped around, but the unused portion of the line of credit actually grows. So what does that mean? Let's dice that out. So for an example, if you have a $250,000 line of credit and maybe you only used 50,000 with some closing costs and taking a little bit of cash out at the very beginning of the loan for home repairs or whatever you need, that now you've got 200,000 sitting there, right? And believe it or not, that 200,000 the next year is going to be approximately 206,000. And then it's going to compound, right? So there's a compounding factor that's attached to that. And that it varies along with the interest rate. And I won't get into all the details, but I explain it in detail, to the client so they really understand that. But what does that mean when you fast forward? People think, oh, yeah, that's kind of cool. But this is where people don't understand the compounding, right? So if you're getting that line of credit in your early 60s, by the time you're late 70s or mid 80s, it could be $1 million. And I've calculated it out many times where it is. So, when you look at the cost of the reverse mortgage, it's nothing compared to how much a regular long-term care policy would be. If people are going to buy
Of
a
course.
long-term. So that's an alternative way. They use this line of credit to age in place. And, most time you're not just going to use the whole wad all at once. So you can draw a little bit out here and there later on in life and not have to be making a payment. So it's a very good creative way to use it and just let it build. Get it when you don't need it. It's easier to qualify, right? If you're still married at the time and you're not widowed, it's going to be easier to qualify. It's pretty easy to qualify for a reverse mortgage, but usually when one spouse passes, on average, about 60% of the income's gone. So we do still need to
Yeah.
make sure you pay for taxes and insurance and can qualify for that and utilities and things like that. So this line of credit could be saved for later for long-term care at home or home repairs, or maybe you're going to start using it sooner just to have somebody come in and clean, just to have somebody come and mow your yard.
Yes. Well, you just said something that is so key. And I like to think that I've written about reverse mortgages, numerous times. I like to feel that I'm very knowledgeable, but until I met you, until our first conversation, I did not realize that a reverse mortgage line of credit was actually a compounding asset. And I just want to drive that point home because, of course, over time, with some ups and downs, our homes, they are assets that are growing in value over time. And so I would normally think, oh gosh, if you go and you get a home equity line of credit, a HELOC from your bank, that, if you get a HELOC for 50,000, that amount isn't going to grow. But with a reverse mortgage line of credit, it can, and you can get it a decade or 2 decades before you even need it, and you have a larger asset that is waiting for you if and when you need it. I want to also get into a few of what are some of the other reverse mortgage myths or misunderstandings that you have heard? Oh, you're going to lose your home, you're going to get kicked out, your kids don't get anything. I would love you to address, we've got a couple minutes to address those sorts of myths and misunderstandings that might still be out there.
Yes. So I would say the biggest myth is you hear, oh, I'm giving my house to the bank. You are not giving your house to the bank. You're not giving away your equity. You're using your equity. It kind of drives me crazy when I hear people say, oh, I'm going to lose all my equity. Well, no, you don't lose it. You use it. And you're using it hopefully in a smart way. So you remain on title. It's your home. Just like a regular loan, right? When you're no longer gracing the earth with the presence, the loan needs to get paid off, really just like a regular loan. When you pass, your kids have to pay off that loan. And I want to say it's about 65% of seniors actually have home loans. So to be able to free up some cash flow, it's huge. The other big myth is, oh, I'm going to get kicked out of my house. People get fearful of they hear the word upkeep. Yes, you do need to upkeep it. It's not a myth so much, but it's also less of a fear than what people think, right? They think that it's really easy to lose the house. It's actually pretty difficult. So you just need to pay your tax and insurance. Now, I understand if somebody is currently having a mortgage payment and they have an escrow account, now they get a reverse and they don't, right? It can be easy to forget things. We're aging. If you have a good loan officer like me, I'm going to reach out to you twice a year and remind you to pay your tax and insurance. So here we are at the beginning of October. All of my clients will be getting either a text message, phone call. I'd really like to try to, reach personally, have a conversation with them and remind them to pay their taxes. It's tax time. So that's pretty easy. Whether you had a loan or not, you have to pay your taxes, right? The county's going to.
Yes. And that's one of the things that bugs me when I hear I kind of think of it as really fear mongering, like, oh, you could lose your home. Well, how else you lose your home? You lose your home if you can't make your mortgage payments. And there are seniors out there, sometimes on a fixed income, or as you said, they maybe lose a spouse. And that's what happened to my friend Margot. And most of her income, the family income, was gone. So she could have lost her house, but the reverse mortgage actually helped her stay in the home for like another 15 years to come. It was truly amazing. And she never had to make another payment. So we've got another minute here. If there's another myth that you can bust for us, Rebecca.
So the other is, when does it have to get paid off? They think it has to be paid off immediately. Some people have that fear, and it doesn't. So now if you pass, the loved ones do need to contact the mortgage company sooner than later, and they will send you a notice of payoff because, they've been waiting. This is a long-term investment for them, but they're not going to kick you out. They are going to work with you. You need to have a timeline. They will do 2 extensions, so you can have up to a year, but you need to have your ducks in a row, right? And explain to them what's going on, that you're working with this real estate agent, you're working on cleaning the house out, line it out for them and keep them updated as to what's going on so they can make those extensions.
I love it. That's very valuable advice. I'd like to take a moment here to encourage you, our listener, to subscribe to our YouTube channel, Vivatude. This is Kate Phillips with Vivatude, and we'll be back in just another minute with Rebecca Porter talking about reverse mortgages.
And thanks for listening to Vivatude. 4 hosts, one each week. We help you revivitude your next chapter because purpose, passion, and prosperity isn't out there. They're already within you. Brighter, bolder, truer. Vivatude.